Hi, I'm Peter Switzer and this is the Super Session. I'm joined by my mate Paul Rickard. Paul, a big question I'm getting all the time at the moment is the stock market's done really, really well, but how long will this bull market run? What do you think?
Look, Peter, I think the market's probably got a couple of years, and I base it on three things. One is interest rates are going to stay low for a long time. They might have a little wobble up at some stage, but we're in an environment of lower interest rates. That's got to be good for asset-based markets like the stock market and the property market.
Because when interest rates are low, mate, term deposits are unattractive, so people go into the stock market looking for a better return.
Yields are higher, and of course, for those that do gear either to the property market or even the stock market, it becomes more attractive. So, that's exactly what the central banks are trying to do: keep interest rates low and get us all to invest in the equity and the property markets.
And the companies that employ people and create jobs and all that sort of stuff.
Yeah, I think the other thing that's changed post the election is we now have a much more sympathetic government towards business. Putting your politics to one side, you've got to say that the last government was pretty business unfriendly.
They hated billionaires like Clive and Gina, but they didn't actually do a real lot for small business.
They didn't do much for anybody, and they certainly didn't create much of an environment for anyone offshore to think about investing in Australia, which is the other negative. So, look, we're in a new environment. I think you're already starting to see some signs that both consumer and business confidence is picked up. Now, that hopefully will lead to what we describe as what you're fond of saying, the E part in the PE equation. That's earnings. We'd like to see company earnings go up. So I think that's the second factor. And then, thirdly, the overseas markets, and particularly the overseas economies, there are still encouraging signs of growth. I mean, Europe came out with some good numbers this week.
Yeah.
It actually seems like there are
green shoots.
Believable
ones.
Believable green
About
shoots.
6 months ago, I was trying to argue with you. I could see them, and you were a little bit more sceptical. But now we are starting to see them, and a lot of people who are wise old owls like you were in the same boat. But they're starting to say Europe is actually looking better.
Yeah. So my 2 years comes from the fact that I think we're about a year and a half into a bull market. Yeah. Typically, these things last 3 or 4 years. Now, that doesn't mean we won't have a hiccup in the US, and maybe the US is more overvalued than our market.
Yeah, and I know that Wells Fargo's chief investment strategist, Gina Martin Adams, she thinks the stock market could fall by 16%, though she's been a bear all year, and she probably thinks eventually she's going to get it right. But imagine, say, if the US market did come off, say, 10%, a correction. Do you think we would necessarily follow to the same magnitude?
Look, I think unquestionably in the short term, pretty well.
Okay.
So the immediate reaction, particularly if the US is quick, if it's a quick 10% over, 2 or 3 weeks.
With panic.
With a little bit of panic and some, pretty spectacular media coverage, because the media always likes to get involved when things are going down. They don't talk about it when it goes up, but they get involved when it goes down. Look, we'll follow. But look, over a while, markets get the story right. Yeah. So the initial reaction is not always the right reaction. I think if we were, saw a 10% fall in the US, we'd get about 10% here. But I think around about 4,800, somewhere in that mark, our market would find support again. I'd be a buyer on the dip.
So it's a buying opportunity. Okay, another problem people be worried about now is this housing bubble hype.
Lots of talk about it.
Unbelievable. Even the IMF is sending out an economics team, which sounds like a junket for the economists involved.
Summer in Sydney, why wouldn't you? In Melbourne, why wouldn't you come out on a junket?
Yeah, because it's junket because you can get all the data they need on the internet nowadays. You don't need to fly here like you would.
Oh, you need to do some physical inspection, Peter.
Oh, of course.
You are such a cynic.
Yeah, I am a cynic. So, Paul, how worried are you about housing bubble?
Look, I'm not. I mean, I think that we've got to be honest. The housing market has certainly picked up. We've been talking about that for about 9 months. Sydney is leading it, and it's a lot stronger in Sydney than it is in Melbourne.
Yeah.
And not to say the other states, and there's even a few more positive noises about places like the Gold Coast, but so that there is certainly a lot of activity in parts of the property market, and we're starting to see a bit more price action. Initially, all the action was in clearance rates. We're now actually starting to see some figures come out showing there's a little bit of price movement. Yeah. Again, I'm not too worried. I think this market's been pretty soft for the last 3 or 4 years. I think all the talk about bubble is. We're not seeing a price bubble. It's not euphoria out there. Typically, these things will last longer.
And I guess people who are going to get in the market, say, for example, inside the self-managed super fund, or if they're buying for themselves, they've got to think that this is the beginning of the rising market. The longer you stay out, the more likely you'll be paying top price. But if you wait too long, maybe you'll have to wait for the next downturn.
Yeah, and that's always an issue, particularly when, I mean, it pays to be patient, but sometimes these things take off fairly quickly.
Yeah.
Look, we're seeing there's a lot of, probably more hype than reality. It's only occurring in parts of the market, and again, I think the old adage is look carefully and look at some of the other markets that either may not have moved or may offer better long-term growth prospects. It's not always going to be about, you know, inner city apartments in Sydney. You've seen what's happened in Melbourne the last couple of years.
Sydney's gone up 8.5% this 12 months, but Brisbane and Gold Coast has only gone up 1.5%. There's probably more value in that area because the market hasn't taken off.
There may well be, and Margaret Lomas, who's an expert of ours, always says, you know, look outside your state. You know, the best market may not be the market right around the street next door.
All right, mate, thanks for joining us. That's a super session for this time. See you next time we get together.